true. Stephen Nash, Director of Strategy and Market Development at FIIG Securities, is joining me now on the desk in Sydney. Stephen, welcome.
Hi.
Is this in fact the case, do you think?
Look, I think there's a growing trend with issuers looking at the Australian market. There's obviously a large demand for Australian dollar currency. The currency liquidity has improved dramatically of late. Now we need other products. We need more diversity and we need longer bonds. So what's happened recently is we've seen issuers that haven't come for a while to the Australian market come back and issue. There's also a funding advantage for a lot of US dollar-based issuers where they can pick up back into the US dollar via the basis swap. The supranationals have been issuing here for quite a while, but it's good to see other issuers coming in.
What does this mean for our bond market overall? Does this mean that the ASX is going to get into gear and, you know, give us something that looks a little bit more like a developed countries market?
Look, I think the OTC market will probably develop and get larger. You know, we're seeing longer issuance by the Commonwealth now. The 2029 was issued yesterday. They're building that curve out to a 20-year nominal bond, which is a really good development. So we're getting longer bonds and we're getting more diverse bonds, and that chimes in with the demand for the currency, one of the most liquid currency pairs in the world, Aussie US dollar. So I don't expect this trend to stop right now.
Adam, come in here.
Thanks very much, Ora. Stephen, you know, we're in a global environment where central banks around the world continue to slash rates. I wonder if the Reserve Bank of Australia isn't done with its rate cutting mode, what impact could that have across corporate bond issuance in Australia?
Look, I think the question is, I mean, how much are they going to cut? I think there's probably another 25 points in November to come, and then probably quite a large pause. We still have very attractive funding relative to other major global currencies, and we also have very good liquidity. So I think to some extent that's a bit of a short-term consideration, and that in the medium term that funding advantage of Australian dollars will remain there. And obviously the credit story is a great one. So the combination of those two factors I think will support the currency, and the development of the bond market also I think will support the currency.
So as interest rates come down, basically my question was, you know, will that increase the appetite for this corporate bond issuance that we're seeing in Australian dollars?
Look, I think really that's independent of this development in the Australian corporate bond market. I think lower funding levels make the overall attractiveness of the currency somewhat less, and I suppose you'll have a bit of a drop in the currency as a result of that easing. But I think the demand for the Australian dollar will just continue, and I think that will support the development of this market. It's really essential that we get more diversity. I think a lot of managers locally have really wanted a lot of non-financial issues because there's just not enough. The local index, the composite bond index, is really dominated by financials, and we really need some new non-financial issuers here.
So we know BHP has done this. We know Telstra, of course, has been in this market for some time. What about the smaller players? I mean, there's not a huge market for that. And I guess a lot of that is because investors don't really want to invest in a company that is not necessarily rated, like some of the international players.
Yes, we have actually done a few issues, or one issue for a non-rated company, a smaller company here. There's a lot of interest by the smaller companies to look at diversity of funding. A lot of these smaller companies have bank funding by one bank, and they're saying, well, we need more diversity here, and it's logical that they should be looking at doing their own bond issues to increase the diversity of funding.
It's not easy for them though, right? I mean, the market for those smaller players is definitely more closed.
Well, they have to do smaller issues, but and the spreads they have to pay are quite wide. But that's very attractive to a lot of our investor base. Self-managed super funds, high net worths, spreads of 400 to 500 over are very attractive, and I think that's what that will remain the case.
Stephen, you know, I'm not sure if this is at all related in terms of the appetite for corporate bonds, but I've noticed, you know, lately there have been a couple of deals in the securitization market. One lately, Columbus Capital buying the Origin unit of ANZ. I mean, it was a $2.2 billion portfolio acquisition, and in the newspaper they're saying that the securitization market is returning, or it appears to be, because of this one big deal. Does that have any sort of impact on the overall appetite for debt issuance in Australia?
Well, what's been happening, as you know, we've had a large credit rally and spreads have come in dramatically. What's been left out in a lot of cases is the RMBS market, and it's appeared very cheap for quite a while now. So there is a lot of interest returning to the RMBS market. It had been left alone for a long time, but now that corporate spreads are in so much, the relative value of the RMBS market is starting to become apparent. Funds are starting to get involved again, as they had prior to the crisis. So I think that securitisation market will increase in terms of issuance volume. We've seen some contraction in spreads, but not that much, and I think there's probably more contraction to come.
So, Stephen, as an investor, if I'm sitting there looking at this market, where do I look?
Look, I think in terms of RMBS right now, that's probably the best sector. Some of the supers are attractive, but the problem with the supers is the European sector right now. I think one of the most attractive sectors, and it might sound fairly boring, is the Commonwealth bond market, because the bond swap spread is risen quite a bit of late, and you know, bond swap is quite high relative to where it had been.
Do you know, as long as we're making money, we don't really care if it's boring, Stephen. Thank you so much for joining us. Good to have you with us.